Hello and welcome to my short little video on private mortgages, private lending mortgages. My name is Dennis Street. I'm a mortgage agent with Mortgage Intelligence and have been in this business for a number of years. I do quite a few in the private mortgage area, so I wanted to cover it because I know that many people know something about it, but they don't know enough. And it is something that can be of value to you if ever needed, okay? So I wanted to cover the why you would be considering a private mortgage, the pros of private mortgages, and it wouldn't be fair to not cover the cons. That's very important. And just give you a better idea if you find yourself in this position where you want to complete a financing venture. Okay, so let's start right off the bat with the whys. Now, first off, you would agree is that maybe the bank finance institutions have declined your application, so you're not getting your financing. And it could be for a variety of reasons, most related to not enough income to validate debt servicing, poor credit or bad credit or limited credit. Um, Whatever the reason, you're turned down. Some who've had experience in private mortgages have found them to be maybe less complicated and faster than traditional bank financing, so they'll opt for that without any consideration. They have the experience; they're satisfied with it. So that's the reasons why you would be looking into it. Now let's cover the pros. This is very important here. Um, the real pro is that the main security here for the private lender is in the real estate itself. Okay, you may have bad credit or no credit, limited credit. You may have limited income documentation. You may be in the self-employed market, which is more of an issue in current years. But they're not negative here. They still work for private lenders. Your business may have weak financial statements. Your property could be between residential or commercial. They will entertain both. They will entertain it as a first mortgage, as a second mortgage, and in some cases even a third mortgage, depending how much the loan amount is to the value of the property. And purchases are perfect for it. Refinancing, which would be debt consolidations, or it may be for investment purposes. It may be for equipment capital requirements, some type of investment, but it can be utilized very effectively in all those areas, and that are all pros. The the cons. Well, right off the bat, we know that, or you would consider that the fact that rates have been higher here. The loan to value for first mortgages maximum is 75%. Second mortgages can go up to 85%, but it's going to really depend on the elements that are involved with the whole covenant to the mortgage. Okay, shorter terms, maybe 6 months up to 2 years. Renewals are available depending on payment history and the financial position of the private lender. In all cases, you're going to have to put up money as for an appraisal. Appraisals will be required, especially in the higher loan to value ratios. Early payout is available here, which is not really a con. It's 3 months interest in most cases. That would be the normal. Okay. Additional closing costs. This is really critical. You're going to have costs because you're going to have a lender fee higher, more than what you've ever paid before, and broker's fees as well. So when you combine the higher interest rate and the additional cost to actually close this mortgage, they are definite negatives. But if you ever have the opportunity or you're faced with this as a decision, quite often it is the best and sometimes the only alternative to the banks. So if your mortgage broker is talking to you in these terms, you might want to pay attention, work on your exit strategy, be comfortable with that, and you should be comfortable with it. That's it in a nutshell. I'd like to thank you very much for taking a look at this short video. I hope it's helpful to you. Good luck to you in your future, and thanks for watching.